Welcome back to my weekly QQQ trade series. For anyone new here, I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals. Today, QQQ is trading at about $518 per share, having pulled back $10 from last week. I am short a $504 cash secured put and a $504 covered call, which is in the money. If you watched last week, you may remember that I rolled my covered call out 4 weeks, which was the only way to both raise the strike price and bring in a net credit. Since that contract is still 3 weeks from expiration, I don't need to do anything with it today. I also sold a cash secured put with a strike price of $504 that is expiring in the money today. It only brought me a small premium last week, but with the pullback, I can make about 4 times as much this week, rolling it out 7 days and keeping the same strike. Let me show you how I do it. Today's QQQ trade management decision is pretty easy. You may remember last week on December 13th, I rolled the covered call out 28 days. So the covered call doesn't expire until January the 10th and has a strike price of $504. I have a cash secured put with a strike price of $504 that's expiring today. When I opened this cash secured put last Friday, the share price was $528. And I got very little premium for it because the put was so far out of the money, but I wanted to keep the strike price of this cash secured put no higher than the strike price of the covered call. So the pullback we've had this week has actually helped my positions, and it's going to allow me to roll out this put 1 week and make more premium than I did last week. So let's move on over to the trade screen. The share price has pulled back about $10 a share. You can see here in this graph. It's dropped from last Friday when it was just a lot higher. And so that's going to let me get more for this roll than I would have if the price had not pulled back. So I'm going to actually, let's go up here and look at the December 27th expiration, 7 days from now. If I keep the same strike price of $504, I can bring in about $140 or $150. And I'm going to have to pay a little bit to close the one that's open now. It'll cost $6 or $7 to close the current open put, and I may end up just leaving this one to expire worthless at the end of the day if I can't get it to roll, because I am almost 100% certain that it will expire out of the money, and if it doesn't, I have the funds in the account to secure it. But I'm going to try to roll, and if I can't roll, then I will just leave this one to expire and sell a new one at $504, expiring next week. Okay, it filled at $1.55 a share, so I will enter it on the spreadsheet. So that was an easy decision and an easy $153.68 with a 15.9% annualized return, which is right in my target range. So I'm going to do a quick total expense and income summation and divide by the current number of shares that I own and see where things stand. And there we have it. This was an easy decision, and I will see you next week, and we will roll the cash secured put again, and we're still leaving the covered call, leaving that alone for a while, and I'll try to roll it up in January.